Hi there, welcome back to Accounts is Easy with Kavita Ravindranath. Yes, I hope you're doing well. सब बढ़िया चल रहा है स्कूल में पढ़ाई कॉलेज में पढ़ाई and now यहाँ पे पढ़ाई. YouTube is always fun because you have the flexibility of playing the play, pressing the play and pause button. अपने time से हिसाब से पढ़ाई कर सकते हैं. So it's really nice. It's good, a very flexible kind of a thing. Even if suppose you've missed a class in the school, you can come back to YouTube and follow up. And of course, I am trying to cook up things in the easiest way so that you can swallow it around. Yeah. Now today's topic is interest on loan. Interest on loan. Loan bolte hi kya aata hai dimag? What is the first thing that comes to your mind when you talk about loan? Loan is a borrowing. Mostly, yes. That's used in the same sense as borrowing. You take a loan, meaning you have to repay the loan and also you have to pay the interest on that, right? So taking a loan, when you take a loan, it's a liability for you. Liability meaning something that puts you under some responsibility to repay something you do a favor to back to someone else, right? So here a liability is a loan taken. Now we're talking about the loan from two point of views. One from the point of view of the partner, one from the point of view of the firm. The firm can be taking a loan as well as giving a loan to the partner, right? So let's talk about that diagrammatically. Okay, now look at this diagram very carefully. Here we have two entities, firm and partner. And remember, in the books of the firm, we are making this entry, right? Okay, so see, firm and the partner. One is the firm is taking a loan from the partner. Loan from partner, okay? This is a liability. This is a liability to the firm because it has to repay the amount of loan to the partner. Also, it will pay interest on that. We'll come to it later. Another thing is loan. The firm is advancing to the partner. Partner is receiving a loan from the firm. This is exactly the opposite. And this is called loan to partner. And that is an asset to the firm. Because it has given that amount, obviously it will take it back from the partner. Correct? Along with interest, yes, it can charge interest. So understand that loan is given to the partner, so the partner will pay the loan to the interest to the firm. So the firm is going to charge interest from partner. Charge meaning, of course, partner is paying. For the firm, it's an income. Okay? And this loan that the firm has taken from the partner, it is supposed to pay interest, allow interest to partner. And that will be an expense for the firm. This is what we discussed in the absence of partnership deed, the 6% thing. So here the by default rate is 6% per annum, and if you have a deed, you will follow the deed. Deed mein likha hai 10%, 10%, 12%, 12%. But if there is no deed, it's 6%. But there is no default rate for this loan that the partner has taken from the firm. We have to solely depend on what is mentioned in the deed. So the rate of interest depends on the deed here. If it is not mentioned to charge interest from the partner or the deed is not there, no interest will be charged from the partner. Okay? Clear about this? This basic thing has to be very clear. Alright? Now we go to a few journal entries and then the calculation. So the interest on loan and the loan part, loan account, partner's loan account, everything will be clear with this one video. Alright, so here we are. On one side we have loan to partner. Loan to partner. We just discussed that is what? Is it an asset or a liability for me? Loan to partner? Absolutely. It's an asset for the firm. This side we have loan from partner, which we are talking about. It is a liability to the firm. Okay? Now, for giving the loan to the partner. First thing is the amount being transferred to the partner. So for giving the loan, we have loan to partner's account, debit to cash. Why are we debiting it? See, I'm just going through the journals as well, the concept of journal, the basic. Okay, loan to partner is an asset. As it is increasing, I'm debiting the asset account. So loan to partner debit when we take the loan, and cash we are crediting because cash is going out, cash is another asset. Cash is decreasing, credit cash. Second entry in the same side, we have for charging interest. Yes, at the end of the year, we will charge interest to this partner who has taken the loan. We will debit his capital or current account. Partner's capital or current account debit to interest on loan. Why am I crediting interest on loan? Because it is an income for me. We just discussed, right? This is an income. All incomes will be credited when they increase. So here I am trying to book my income here. And I'll take it from whom? The partner. So it's not cash account debit to interest on loan. We will be taking it, charging it from the partner's capital. Usually, whatever transactions happen between the firm and the partner are recorded through the partner's capital account. Not everything is cash coming in, cash going out. Okay, so the capital account records all the plus and minus, and end of the year we have the balance, okay, of the cash, right? Of the capital account, sorry. So this is the entry to charge the interest. Now I have written current account. What is current account? We'll come to it again later. There are two methods of maintaining capitals of partners. So अभी के लिए ये समझ लो ये capital account है for now. Okay, we'll discuss the current account later on. Okay. Now, so here then to close the interest account, all incomes and expenses are closed at the end of the year by transferring to profit and loss account if they are charged against profit and things like that, right? Now this is an income. All incomes are credited to the profit and loss account. Yes, remember from the final accounts that we made, discount received, commission received, interest received, whatever, dividend received, all of that, rent received will be on the credit side of profit and loss account. So that is the closing entry. Interest on loan, see, I had credited here, I will debit to close. Debit interest on loan and credit partners, sorry, profit and loss account. Okay, so you close the interest. Now, I'll come to this later. Come to this side. For taking the loan, we are taking the loan, we are getting cash. Cash is increasing, debit cash. Credit the loan from partner, it is a liability. All liability accounts to be credited when they increase. For allowing interest, interest on loan here is an expense for me. So debit all expenses and losses. That's the rule for the accounts. John, interest on loan will be debited here and credited to loan from partner. Alright, so credit loan from partner here. This will be a very important thing here. Please understand, here when we are talking about interest on loan given to a partner, that we had, see here, debited to the partner's capital or current account, not his loan account. Here it's capital or current, but here it's different. It is being credited to loan from partner. This is not credited to partner's capital account. Understand, here it's a liability we are talking about. The liability, I told you, while we dissolve the firm, the partner is supposed to get back the loan first, and also he has an additional, you can say, priority over the interest on loan that he is supposed to get. That's why we don't merge it with the capital account. We will keep it in his, credited to his loan account only. Alright, so this is the logic for the liability part. This doesn't apply to the asset part, right? Okay, so this is credited to loan from partner. For closing, of course, here I have credited, so I will debit basically the interest on, here I have debited, so I will credit the interest on loan here and debit all expenses. All expenses are debited to profit and loss account. rent, electricity, depreciation, bad debts, everything, right? So all of expenses will be debited to profit and loss account, and here I will credit and close interest on loan account. Understood? So all of this done. Now next thing is, this is a question for you and I would want you all to answer that. Write the answers in the comment section. What is the entry when the firm repays, this is the loan to partner, right? The partner repaid the loan that he has taken. Loan is being repaid by the partner, and here we had taken, that is the firm had taken the loan from the partner and the loan is being repaid to the partner. What should be the journal entry? Alright? Fine. So comment in the comment section. Now we will move on to calculation of interest on the loans. Okay, so a small tiny mini sum for you. Partner X advanced a loan of 2 lakhs on 1st October 2023. The date is given here. Please understand the amount, the date of the loan, that is for the period, time period, and interest on loan is to be allowed at the rate 10% per annum, the rate. All three are very important. This you have done in small classes. If you remember, calculation of simple interest. How do you calculate? Principal into time into rate, PTR, right, or PRT, whatever, by 100. So that is how you calculate interest here on interest on loan. Okay, so the interest on loan will be here, I'm writing it for you, is the amount of the loan into the rate of interest divided by 100 into the time in number of months, if at all, if I'm saying if at all he has given the loan during the year and not right from the 1st of April. Suppose the loan was taken last year. Suppose the loan was taken last year. So this year, of course, you had the loan already there as a liability on 1st of April. So from 1st of April to 31st March, you would have given the interest for the whole year. So it is 1st April to 31st March. This is what is our financial year, right? ये पूरा साल होता है यहाँ पर. Now, if the loan was from year to year, I would have given simply 2 lakhs into 10%, that is 20,000 for the full year, the interest. But the loan was not taken on 1st of April. It was taken on 1st of October, which is exactly middle of the year. Correct? 6 months down the line, April, May, June, July, August, September, 6 months here. Then October, November, December, Jan, Feb, March, 6 months there. So it's exactly middle of the year that I have taken the loan from the partner. So 6 months, for 6 months, I will be required to calculate the interest on loan. Alright. So interest on loan becomes amount 2 lakhs. Into the rate 10%, not 6%, because it's very clearly given, the rate is given there, right? So they must have decided. And time is 6 months, 6 by 12. Why am I doing 6 by 12 here? Because this interest is for the full year, meaning per month divide by 12. And into 6 months, for the time period, I need to provide interest on that. So 10% of this is 20,000 and half of that will become 10,000. Okay, please check that. So 10,000 becomes interest on loan that the partner is supposed to be getting. Alright, please make a note of this. Now, let's take another sum. This is question number 2 for you. Partner X advanced a loan of 1 lakh on 1st of January 2024. Interest on loan is to be allowed at the rate 5% per annum. Calculate the amount of interest on loan due on 31/3/24. Yes, the year is ending on 31st March 24. Pass necessary journal entries. If the loan was repaid along with interest on 31st March 24. So यहाँ पे journal entries भी बताने हैं हमको. Alright. So here 1 lakh is the loan taken on which date? It is on 1st of Jan 24. I have taken the loan, that is the firm has taken the loan. Cash account debit to loan from X. X is the partner and 1 lakh is the amount. So 1 lakh I put here. This is the first entry for the loan being taken. Okay, please put the narration as well. Then the next entry will be on 31st March 2024 when the interest is to be due. Interest is an expense here for me. So interest on loan from X to loan from X, I need to credit this amount to the partner's loan account. And how do I calculate that? Amount is 1 lakh, rate is 5%, time period is how much? The loan is taken on 1st of Jan and from 1st of Jan I need to calculate till 31st March. So whole of January, February and March, 3 months. So from 1st Jan to 31st March is 3 months. So I will calculate the interest like this. 5% of this will be 5,000. 5,000 into 3 by 12, meaning divide by 4. 5,000 divided by 4 will be 1250. So 1250 will be the interest on the loan. We made it due. Now we will repay. Okay. For repayment, 31/3/24, the same date we are repaying. So when you're repaying, the liability is going down. So loan from X, debit. How much is the amount along with the interest? This is 1 lakh plus 1250, the interest. 1 lakh 1,250 is the total amount standing to the credit of loan from X. I have credited here 1 lakh when I took the loan. I credited this interest 1250. Alright. So total is 1 lakh 1,250. And that is what I am going to pay. So this is the entry for repayment along with interest. Alright. So I hope this is clear. Journal entry as well as the calculation. Please take your screenshot and note it down. Okay. Let's take one more sum on loan advance to a partner. Let's do this. Question number 3. Geeta, a partner, took a loan from the firm. Okay, so this is firm is giving loan to the partner. 6 lakhs. On which date? 31st August 23. Pass the adjusting entry for the interest on her loan if interest was to be charged at 10% per annum. Alright, the rate of interest is given, very good. And 6 lakhs is the amount taken on 31st August. 31st August, so from when to when should you calculate interest on her loan? So this is 1st April to 31st March. May, June, July, August. August also gone. Okay, end of August. This is 31st August. Okay. So no interest should be charged for August. Remember, 1st and 31st makes a lot of difference. If this was given as 1st August, obviously I will charge interest for the whole of August also. But here, August should not be calculated. You start calculating from September. September, October, November, December, Jan, Feb, March. 7 months. So interest should be charged for 7 months. Alright. So let's calculate interest and then we pass the entry. Interest is on 6 lakhs. Okay. At 10% for 7 months. Okay. This goes as 35,000. Please check that. Adjusting entry you have been asked. Please, it is very specific. The sum doesn't say all journal entries or all required journal entries. No. It is just asking you for adjusting entry, which is to make the interest due. Now this interest, the firm is going to charge from whom? Geeta. So the journal is Geeta's capital account debit 35,000 to interest on loan 35,000. This is the adjusting entry for making the interest due. Alright, please make a note of it. So this is how you calculate interest and things like that. Alright, so for the loan part, interest on loan, journal entries and calculations, everything is done. Okay, so we'll see you again in the next class. Till then, keep practicing accounts, which is easy. Please do subscribe and share, and please like. Thank you for your support.